We are now on record. Everyone, please stop talking. Listen. Can I have your attention, please? We were discussing, guys. Please behave. Listen to it when I say. If not, I'll use a different language. So I tried in the human language. If you don't listen, I'll try your language. Illustration number 8. We're done with 7th one. Fireproof. Next, some animals don't listen. You need to tap on their back, tap, tap, and then say. I would go a step ahead. Fire occurred on 1st of October 2007. Underline 1st of October 2007. 1st of October 2007. Date of fire. 1st of October 2007 is date of fire. In the premises of X and company. From the following, calculate the amount of claim. Shall we compute the amount of claim? Yes. Look at the data they've given. Stock at cost on 1st of January 2006. They've given the details of 1st of January, 30th of September. So I think our year is 1st of January to 31st of December. So for now, we need to do memorandum trading account from 1st of January 2007 to 1st of October 2007. We need to do memorandum trading account from 1st of January 2007 to 1st of October 2007. Are you getting it, everyone? Okay. So to start with, we have 1st of January 2006 data. This is not relevant for current memorandum period. This is for the previous period. This is for the previous period. We need to preparing a trading account if in case we don't have some information for the current period. For example, trading account should be prepared to determine GP or GP percentage, or secondly for the purpose of determining closing stock of previous period, which will help us determine the opening stock of current period. If both GP percentage as well as the opening stock for the MTA period is available, then we don't have to prepare a trading account. The data for the previous year is irrelevant. Yes. So as of now, we don't know. We'll keep that in mind. 90,000 previous year. Stock at cost on 1st of January 2007. So right next to the 90 PY, it is previous year data. However, this 70,000 is previous year's closing stock, current year's opening stock. Previous year's closing stock. Thank you. Current year's opening stock. Am I right? What's after that? Purchases during 2006. So 2006 is previous year. So this 4 lakh rupees is previous year's purchases. Am I right? Then we have purchases from 1st of January 2007 to 30th September 2007. So this is current year during the memorandum trading account period. This for which period? Memorandum trading account period. Then sales during 2006, previous year's sales. Sales from 1st of January 2007 to 30th of September 2007, memorandum trading account period sales. Then 2007, the cost of purchase. In 2007, the cost of purchase has risen by 20% over the levels prevailing in 2006. Usually we compute last year's GP percentage and take last year's GP percentage as current percentage. Or I told you in some cases, instead of giving current year's GP percentage, they can give you last year's GP percentage or data to compute last year's GP percentage, and they'll tell you trend that is expected in the current period. You do that add trend or deduct trend. Am I right? When do you add trend? When the selling price is increasing with no change in cost, or when the selling price is increasing beyond cost price increase. Am I right? When would there be decrease in profits? When selling price is decreasing with no change in cost, or cost is increasing with no change in selling price, or selling price is decreasing and cost is increasing. That time there will be loss. Am I right? Say something. In this case, they're not telling us trend. They're telling us the market condition, and we need to identify the trend. They're telling cost of purchase is increasing by 20%. When cost of purchase increases by 20%, profit will decrease. Profit will, do you agree with me? Next step. And they're telling in 2007, selling price has gone up by 10% over the levels prevailing in 2006. Selling price has increased, cost has also increased, but not increasing the same ratio. When the costs have increased 20%, selling price increasing only 10%. When the costs are increasing 20%, sales are increasing only, that difference would still make lesser profit than previous year. How much is that? That is it. That is what we should find. That is what we should. Are you getting what I'm trying to tell? Okay, everyone. Hello. That's the part. And salvage stock is 5,000. So this is the trick. This using this A and B determining the profit is the trick in the present question. But till then, rest of the data is simple. So do we have to do previous year's trading account? Yeah, of course we should. Of course we should. Are you getting it? Come on, let's start. So help me out with the data. So first line of information that we have is stock at cost 2006. Opening trading account. Trading account debit side 90,000. No. In trading account, I'll write opening stock. How much? 90. Then closing stock 2007. Like previous year closing stock, current year opening stock. How much? Closing stock is 70. And in the current period, it is memorandum trading account. Mein, it is opening stock. How much opening stock? 70. Am I right? What is after that? Purchases 2006. Last year's purchases 4 lakh. Let me write in my trading account 2 purchases. How much? 4 lakh. Am I right? What is after this? Purchases from 1st of January 2007 to 30th of September 2007. That is during memorandum trading account period 6 lakh. Let me write in my memorandum trading account 2 purchases. How much? 6 lakh. 6 lakh is at which level? Is at which level? Current year purchases, no 6 lakh. So 6 lakh you will write it here, no? No. Remember 6 lakh is at previous year price level. No. At current year price level it is 6 lakh. Current year mein what is the purchases? 6 lakh. That is after the increase or before the increase? After the increase. Now before the increase how much it would have been? It is X. So that you add 20%. Then it becomes X plus 20%. Previous year stock price plus 20% is current year stock price. Let me repeat. Previous year stock price plus 20% is current year stock price. Am I right? Not exactly previous year stock price. Previous year level of pricing. Units is current year's price. You will arrive at purchase using two things. A into B. A, number of units you purchase, multiplied by cost per unit or purchase price per unit. Number of units is dependent upon current year sales. But the price per unit, previous year's purchase price, if it is 10, current year may purchase price is 12. Are you getting it? So previous year may would have multiplied those units into 10. In the current year, you multiply those units with 12. Do you agree with me? Yes or no? So 6 lakh is current year price. So let's say I'll write 6 lakh in the purchase account, in the memorandum trading account. Let's say I'll write sales of 8 lakh 80. How do we find GP? Can I apply previous year's GP percentage? No, I cannot apply previous year's GP percentage. Can I do last year's GP percentage minus 20%? No, I cannot do last year's selling price minus GP percentage. Why? Purchase cost is increasing by 20% doesn't mean that sales profit is decreasing by 20%. Cost per unit is increasing by 20% doesn't mean that GP will decrease by 20%. I'll tell you the reason. Let's say I was selling 100 units. I was selling 100 units in the current year. This is previous year. Previous year I sold 100 units costing 10. Costing 10 rupees each at let's say 15 rupees. How much is the profit per unit? 5 rupees. Into how many units? 100 units. Correct or not? How much 100 into 5? 500 rupees profit. In the current year, cost increased by 20%. So instead of 10 rupees, now we are buying at 12. Instead of 10, now we are buying at 12. But can I say current year GP will be 20% less than previous year? No. The reason is their selling cost per unit is decreasing. Am I right? Number of units is not given. Can be increased, can be decreased, but per unit profit will decrease. Do you agree with me? And profit is found as sales minus cost. No, sales is also changing. Sales is also selling price is gone up by 10%. Previous year mein sales was 15 per unit. Now it is 16.5. Last year purchase price 10, selling price 15. Current year purchase price 12, selling price 16.5. How much is the impact on profit? We can't tell. Even if you arrive at some data, to apply that you need to have data here in units. You need to have data here in. We don't have unit wise data. We don't have unit wise. So we can't apply previous year GP percentage on current year. So what do we do? Very simple. We are preparing not trading account. Are we preparing trading account? We are preparing memorandum trading account. What is our objective? Closing stock. Why do we want profit? We want profit because in our trading account, opening stock, purchases, closing stock will be at cost, sales will be at selling price. To make that sales at cost price, we write profit on the other side so that closing stock balance figure what we find will be at cost price. Do you agree with me? So our objective is not to find profit. Our objective is not to find. Now, what is the problem that we have in this one which was not there in any other question? What is the problem? Prices are, prices are, did you all understand? Prices are changing because because purchase price is changing, because sales price is changing. We can't apply GP percentage. What if, rather than finding GP percentage at current year price levels, what the way we are thinking is previous year GP percentage will take and we'll try to arrive at current year GP percentage using that. Don't do that. Don't do that. Instead of taking last year's GP percentage, transforming into current year GP percentage, instead take every other item and transform it into previous year levels. Simple, no? Last year, my purchase price is 10, sales is 15, so we know 5 rupees profit or 5% on cost profit. Current year, they have given 12, they have given 16.5. 15 and 16.5, we don't know how to find because number of units is not known. Whenever they give 12 rupees per unit, convert it to 10. When the sales is given at 16.5, convert it to 15. Over, no? For example, 6 lakh rupees is the purchase at the current price level. At the previous year price level, what would have it been? This is 120. How much is 100? 20% more, no? 20% more, am I right? How much would it have been? I'll write purchases 5 lakh. Actually, it is 6 lakh. Actually, it is, but I'll write 5 lakh. Come to sales. Sales is 6 lakh. 6 lakh is 10% more than previous year. No? Am I right? 6 lakh is 110. 8 lakh. Sorry, 8 lakh is 100. 8 lakh 8 is 110. How much is 100? 8 lakh. So I will write opening stock 70. Purchases 5 lakh. Sales 8 lakh. You get this? Now, because the sales is 8 lakh, now I can apply previous year's GP percentage. When I apply previous year GP percentage, then that stock gets removed. I'll get closing stock at cost. Understood? Yes. But that closing stock will be at previous year price level. That closing stock will be at, are you getting it? Now we have a question. How do we identify current year price level में closing stock? We need to check whether that closing stock is from opening stock or from purchases. If that closing stock is completely from opening stock, don't have to do anything. If that closing stock is from purchases, then add 10% over. 20%. No over. How many of you did not understand? Everyone understood? Okay, let me explain. Then I think, oh sir, you would explain either ways. I would definitely explain either ways. Previous year cost is how much? 100. Current year 120. Am I right? Previous year sale price is how much? Not visible. I'm showing. Yes. So sales, let's say, imagine a number, okay? Imagine a number. Let's say 150. Let's say, sorry, let's say 100. How much? 110. Sir, why are you taking 100? Hey, this and this is not. Don't do cost minus sale profit zero. Don't do that. This is separate. This is separate. Are you getting what I'm trying to tell? Bere bere. Okay. Now, come on, quickly tell me what is our previous year's cost. I'm going to say purchases. Opening stock will be fine. Previous year, sorry, current year purchases is how much? 6 lakh. 6 lakh. That is at 120 rupees. That is at, how much will it be at 100? If these same units were purchased in the previous year, how much it would have been? Should I write, how did I arrive at 5 lakh? 6 lakh into 10 divided by 120. That you people will understand, no? This into this divided by this. Should I put arrow mark? Pakka? Sure, no doubt. Similarly, sale. How much is it at current year level? How much it would be here? So we'll prepare trading account of current year, memorandum trading account of current year at previous year levels, so that we can apply previous year's GP percentage. We can apply previous year's. Understood? I will solve it all again slowly. I'll mention it to you also. I'll show the computation also. If in case you still find it not comfortable or you don't understand anything, please stop me there and ask. Will you? At what is it? 6 lakh rupees. It is when it is 120. That is our current year. Okay. So what about previous year? It would be 100, no? Then what is it? That's the question. So 6 lakh, 100 into 6 lakh divided by 120. What do we get? 12 rate purchase at previous year stock level. Why am I rating purchase at 5 lakh when it is actually 6 lakh? Because it is easier to compute GP. And our objective is not to find GP. Whatever GP I find here is wrong. That is wrong to compensate with purchase and sales, which is wrong. Yes. Come on. Next. If we apply, what will be correct? I didn't get you. Sorry. 70,000. 6 lakh is purchases in the current year. Actual purchases in the current year. At the current year increased price level. Okay, no problem. Now, similarly, now come on, tell me what is the current year sales and what is the previous year price may sales. Okay, current year price level may it is 8 lakh 80. That is 110. How much is it at 100? 8 lakh. That is 8 lakh 80,000 into 100 divided by 110. Am I right? So how much do we get? 8 lakh. That's it. Opening stock is 70. Now we need to find GP also. We need to find closing stock also. Am I right? This closing stock, what we find will be at what price? Previous year price level. Remember that. So to apply GP, we need to find GP percentage. That GP percentage will be found in this trading account. So do we know previous year sales? That is there. 6 lakh, 8 lakh, 86 lakh will write here. 6 lakh. So 6 lakh 70, 6 lakh 70. 4 lakh 90 if you deduct, 1 lakh 70 plus 10, 1 lakh 80. Am I right? GP percentage is 1 lakh 80 divided by 6 lakh into 100. 30. GP percentage is 30%. Very good. Now we can easily apply the same 30% here on 8 lakh. If it was 8 lakh 80, could I have applied 30%? No, I can't apply 30% if it is 8 lakh 80. Because if it is 8 lakh 80, my GP percentage will increase slightly and decrease slightly. Yeah, come on, tell me how much will be my GP. 8 lakh into 30%. 2 lakh 40. Now, if I do the total, I'll get 7 lakh 40, 8 lakh 10. 8 lakh 10 minus 8 lakh, 10,000 will be the cost of the stock at previous year price level. Here, have they given any information that where is the closing stock from? Let us assume that they follow first in, first out. What do they follow? Stock of the opening previous year is first sold. Then it is sold from current year purchase. Because of which my entire closing stock will be from current year purchases. Can I assume that? Is it safe for me to assume that? Yeah. When I assume that way, I would have to add 10,000 K. How much percentage? 20%. Stock as on date of fire at previous year level plus 20% increase in cost. That becomes 12,000. Am I right? What is the policy amount? Not available. So can we say it is fully insured? You came now. Now? Huh? ಏನಾಯ್ತು? Parents ಬಂದಿದ್ರಾ? You went to hospital. Who's not well? Who is not well? Come on. Here, how much is stock as on date of fire? 12,000. Is there any salvage? How much? 5,000. So then we get loss of stock 7,000. Policy amount not available. Can I say claim will be 7,000 only? That's it. Khatam. Easier or not? Yeah. So I'll tell you how do people get stuck in this problem. People will try to find current year GP percentage using previous year's GP percentage. Don't do that. It is sometimes more difficult to convert GP percentage of last year to current year. It is more easy to convert purchase and sales to previous year level so that we can apply previous year's GP percentage. Yeah, chalo, copy this. Interesting one. So in our RIP, we'll write this as practice. Copy soon. 8, 9, 10, 11. Three more questions. If you agree, I'll do two more and then give one as homework so that we can start loss of profit policy. ಏನಂತೀರಾ? Next visit is 4 days, no? Books, don't worry. Can I scroll down? ಮತ್ತೆ ಆಕಾಶ್ ಟ್ರೈ ಮಾಡಿದ್ರ ಡಿಪಾರ್ಟ್ಮೆಂಟ್ ಇನ್ನೊಂದು ಕ್ವಶನ್. Hey, anyone who tried the department 14th, next question 14th or 15th? No one tried. Tried. Got Right. Got the answer? Okay. Last we will do. We'll do at 12:35. So till 12:35? Random kidding. ಏನಾಯ್ತು ಇನ್ನ with the stock loss of profit ಮುಗಿಯುತ್ತೆ ಅಂತನಾ? ಮುಗಿಯುತ್ತೆ. 11th question ವರೆಗಿದೆ ಅಲ್ವಾ? We're doing which one? 8, 9, 10, 11, 12. Would have done loss of profit. One day, second half, I would have started branch introduction. Now we'll be able to finish this chapter. Monday is the last class in this schedule. 15th to 19th again my class. 15, 16, 17, 18th to 18th, 19th group 2 starts. By the ಆಯ್ತಾ? Riyesh, what's happening? Fog. He's telling engaged. He is getting engaged. He's getting engaged. Going to get engaged. He got engaged, sir. Really congratulated. So anybody can get engaged. 15 rupees of tax. Our next bidtare perfume. Married ante ಹೇಳ್ಬಿಟ್ಟು. Basin. Because profit percentage we don't know at current year price levels. At current year, what is the purchase price, and at current year selling price, we don't know how much is the profit percentage. We know it at the previous year percentage. So what do? We convert purchases and sales to previous year levels, identify GP. That is wrong GP. We don't care. By this, we find closing stock at previous year price level. So that if we had current year price increase, we'll get closing stock at current year price level. Did you get it, Madhu? Madhu, oh Madhu, oh Madhu. Did you understand this, Madhu? Did not understand. Previous year purchase price, previous year selling price is not the same as current year purchase price, current year selling price. When there is change in purchase price and selling price, there will be change in GP. In return, there will be change in GP percentage. At the current year purchase price and at current year selling price, we don't know how to find GP. But we know at previous year level. So we'll change current year sales to previous year sales level. Current year purchases units to previous year purchase price level. By this, we can apply previous year GP percentage to find GP. That GP is wrong. It is at previous year price level. But our objective in the chapter is not to find GP. And if you do this, when you find balancing figure, you will find closing stock at previous year price level. Such stock, what you found at previous year price level, can be converted to current year price level so easily. Yes, 20% is increase in purchase price. 10% is increase in sales price. Got it, Yash? Got it, Madhu? Madhu got it. Illidira, Yash. So if you do like this, how do we can claim that extra cost? Hey. We have purchased at 20% extra price only. We purchased in the current year. We can claim 20%. If those many units were bought in previous year, it would have been bought at that rate. But it is bought in current year. Current year, Jayashree. Understood. Okay, boss. Come on, faster. Trading account. Trading account done. Should I scroll or are you copying trading account? How many of you are copying trading account? No one. GB percentage. How many of you are copying GB percentage? Okay, copy this. We'll go to 9th one. ಬೇಗ ಮಾಡೋಣ 12th one. Homework ಕೊಡೋದಾ? 10th one answer ಇದೆಯಾ? 10th one homework. Akash is officially announcing 10th one to Akash ಅವರ Akash one. ಆಕಾಶವಾಣಿ FM ಬೆಂಗಳೂರು ಖುಷಿ ನಂಬರ್ 10 ಮನೇಲಿ ಮಾಡಿ. Shall we start ninth one? Me, I used to sing. I sometimes I used to get stuck with some song in the mind. So before going to exam, I have to listen to the song and then go which song to sing today. This is one bad thing. What used to happen is a song beat ಗೆ subject sync ಆಗ್ತಿತ್ತು. When I'm writing the answer, sync beat. No. I don't sing loud. I used to sing. No, not at a cost of disturbing others. You never know where have the other person come from. Huh? Come on, read ninth one. ನಾನೇ ತೆಗಿತೀನಿ ಕಿವಿಲ್ ರಕ್ತ. On 30th March 2012, fire occurred in the premises of Mr. Suraj Brothers. Underline the 30th of March, right? Date of fire. 30th March, date of fire. The concern had taken insurance policy of rupees 60,000. 60,000 is policy amount. 60,000 is which was subject to the average clause. That we obviously know. If in case there is under insurance, it will be subject to average clause. From the books of accounts, the following particulars are available relating to the period 1st of January 12 to 30th of March 2012. So that is a period for which you need to prepare memorandum trading account. Am I right? Stock as per balance sheet of 2011 31st December. That is opening stock. Purchases including purchase of machinery costing 30 is 1,70,000. Should we take 1,70,000? We should take 1,70,000 to inner column, deduct 30 and take 1,40,000. Why? Purchase of machinery is not goods. Machinery is not goods. So we should take purchase of goods only. Wages they are telling 50, but they are saying 3,000 is installation of machinery. That again will eliminate. No? How much will it become? 47. Then sales including goods sold on approval basis amounting to rupees 49,500. Now listen carefully. 2,75,000 is sales. 2,75,000 is in that 49,500 will take separately. 2,75,000 minus 49,500 will take separately. Normal sales is about 2,24,500. 2,25,500. That is normal sales. No problem. Against this 49,000, is there transfer of possession or there transfer of ownership? Transfer of possession. Is there transfer of ownership? No. So we usually reverse the sale and include it in closing stock in regular accounting. But here, though it is transfer of only possession, it is not in our closing stock on the date of fire. So it should not be included in our closing stock. So treat it as sales and ignore. Or eliminate it from sales, but write it on cost at credit side of trading account. That is something same. Sales sell bardu GP percentage rather than removing on the debit side. We will write sales or say the cost price of it in the credit side of trading account. It is same. Sir, when do we eliminate it from sales and then write it at cost in the credit side of trading account? When GP percentage on this goods center on return on approval is different from GP percentage on sales. Let us read further to understand what's happening. No approval has been received in respect of 2/3 of goods sold on approval. No approval is received in respect of 2/3. So 2/3 though, is it there in our go down? No. So 2/3 we will not include in our closing stock. So 2/3 will treat it as sale. We'll treat it as sale because they have not given different GP percentage. Or you eliminate it from sales and then identify GP on that, deduct that and write cost item by credit side. That is not the problem. Now my question is, what do we do with balance 1/3? Two possibilities. Number one, returned. Number two, accepted. Number one, returned. Number two, accepted. They have not given. We have to assume. Tell me, which do you think is logical assumption? Accepted. Why? If they should have returned, they would have told no, so many goods are received back, return. So we'll assume that it is accepted. But in our accounting, whether accepted or not accepted, our treatment is same. The moment we give something, that's it. I have given you my heart. That's it. You accept it. You don't accept. I don't care. Correct. Ownership. Do you own it? No. Possession is transferred. Correct or not? That is what they're caring. They don't care whether they are returning it in the future or they will accept in the future. We don't know. Right now, we'll treat it as if goods have gone. It's not there in our go down when the fire caught. So it is safe with the customer. Will we get insurance claim on it? No, we don't. Weird, but understood, no? So for the first time, let me tell you, whether accepted or not, it doesn't matter. All that matters is, did you give? Yes. Your job is done. Correct or not? Yeah. Oh, come on. So don't worry. Include it in sales. Straight, I'll tell you. If in case you are not read everything in this chapter, or CA foundation, you skip goods and return or approval top. You skip. Let's say you assume that, and you come here. When you come here, this topic is there here. So you don't know what to do. But you know the rest of the adjustments. What do you do in such case in the exam? Do adjustment 1, 2, 3. Say fourth one, except ignore that, and then you do rest of the thing. You do that, your answer will be 100% correct. If you do that, your answer will be 100% correct. You get full marks for not knowing the adjustment. Why? The significance of the adjustment is nullified there. It has no impact. However, it can be presented in two ways. Answer can be presented in two ways. One innocent way, one very brilliant way. I'll show you both. Both my answer will get same. Shall I say something? Come on. And salvage value is 12,300. GP percentage is 20. Shallow. Let's start. So to start with, our policy amount is 60. So in Suraj Brothers, I will write here. How much is our policy amount? 60,000. After that, what do we have? Stock as per balance sheet, 95,600. Opening stock, alva. Say something. Right here. Opening stock, 95,600. Then, second one. Purchases 1,70,000. I'll write here purchases 1,70,000 minus machinery 30, 1,40,000. Am I right? Then what do we have? Wages 50 minus 3. I'll write here wages 50,000 less installation 3,000. It becomes 47. Then what do we have? Sales 2,75,000. Now we'll do the difficult approach, but this is the recommended approach. From 2,75,000, you will eliminate that goods sent on return or approval basis because it is not sales. Because it is not sales. How much is sent on return or approval? 49,500. In that, how much is the stock that is basically not accepted? 2/3. So 1/3 is accepted, no? So 49,500 into 2 by 3. How much? 33,000. When you deduct that, you get 2,42,000. 33,000 is not sold. That balance, what to say, 49,500 minus 33,000. What is the difference? 16,500 is sold. 16,500 is 33,000 is not sold. If you eliminate it from sales, that 33,000 will get included in closing stock. Am I right? Will you get claim on that 33,000? Why? It is not there in our. So I will have to write it on the credit side. It is stock with customer. It is not closing stock in balance sheet. Closing stock in Godum. Stock with customer is how much? 33,000. How much is that? 33,000 at selling price. We need to eliminate profit on this. Then cost price I'll write in outer column. Okay. Then that's it. Question me everything is over. GP is 20%. How much is 20% of 33,000? 6,600. If you eliminate, how much do you get? 26,400. 26,400 is the cost of the goods lying with customer. If I don't write this, it will be part of my closing stock, but insurance company will not accept claim because these goods are safe with our customer. My goods are safe. Okay. Let's eliminate GP here also. How much is GP? 2,42,000 into 20%. 48,400. Now take the total on the debit side. 3,31,000. 3,31,000. How much is our closing stock? Balance and figure. 62. Got this. This is one way. Shall I teach you other way? Other way is very simple. Don't deduct 33. Don't write 26,400. Take sales as 2,75,000. If you do that, you know what will happen? In 2,75,000, this 33 will be there. This 6,600 will come in this. I'll tell you. What is it the second method? Instead of deducting 33, you will write sales at 2,75,000 only. This 6,600 is there, no? That will get added to my closing stock. GP. GP will become 48,400 plus 6,600. 55,000. And closing stock will be exact 62,600. Can I tell you what am I trying to do? Goods are sent. Possession is transferred. It is not there in go down. Assume it to be sales. No problem. Shall I show? Copy this first. Copy this much. That they won't accept. The reason is usually profit percentage will be little different. Or if you do this, you would know no profit percentage can be different. Now let us say on goods and on return of good profit is 25%. Then simple, here minus 1, here you will put 25. Here you will put normally 20. Sir, show trading account once. Trading account, where is it there in this one? Don't tell me. Are you in previous one? What, Madhu? Madhu? Oh, Madhu. Oh, Madhu. I'll show a little later, Madhu. ಏನಾಯ್ತಪ್ಪ ಶ್ರೀಶ್ ಇನ್ ಕೋಪ ಬರ್ತೀಯ ಅವನ ಮೇಲೆ ಏನ್ ಮಾಡ್ದ ನಗರಕ್ಕೆ ಏನಾಗಿದೆ the youth of the country was supposed to be focused on the subject and doing double entry system of accounting. Is it doing? Uh, when everyone should be finding meaning for life, you're finding double meanings. When you should find purpose of your life, you are doing proposal in life. Where are you? Like one great man once told, "యాడకి పోతున్నాం సార్ మనం ఈ రోజుల్లో వైఫైలకి పాస్వర్డ్ పెడుతున్నారు ఎక్కడ చూసినా కరప్షన్ కాన్ఫిస్కేషన్ గ్లోబల్ వార్మిషన్ గ్లోబల్ వార్మిషన్ then he starts today do you know how many people are not getting jobs how many that is not my job just hell and heaven 3000 done copying no, just memorandum trading yes sir not telling 242 plus 236 260 3 lakh 2 no sir it is 26 plus 2 28 28 plus 2 30 30 31,000 and 2 plus 60 plus 40 331 I think it is not telling it is sir this one 26 400 400 33,000 minus 6,600 done okay now listen now let's do it alternative approach this is not suggested to be done in the exam the alternative approach is not suggested to be done in the exam but worst case if you do you might lose 2 marks if it is a 15 marker you might get 13 if it's a 12 marker you get 10 what is it Shh. 12 10 marks or 8 marks tell me how much is opening stock 95 600 purchases 1 lakh 70 minus 30, 1 lakh 40. How much is wages? 50 minus 3, 47. Am I right? Sales, shh, I'll write 275. 275, that's it. How much is our GP? We did minus and all, we don't do all that. 20%. How much is 20% of 2 lakh 75? 55,000. Am I right? Identify closing stock. Yeah, this includes goods and return approval because it is outflow. We're writing actual outflow of goods. Huh? How much will we get here? 60? Like previous one only, no? Yes or no? Here this has changed and this has changed. They both have changed in such a way that we will get the same closing stock. Am I right? So the stock as on date of fire is same. But you need to follow the first approach. You need to follow the first approach, not the second one. You will say, sir, why? When the second one is easy, why don't we follow second one? The reason is here the goods sent on return or approval also are at 20% profit. Goods sold are also at 20% profit. What if goods sent on return or approval are at 25% profit on sales? Then you can't apply on 2 lakh 75 48 400. Then you'd have to eliminate 33, take 33 year profit should be 25%, and then take it and then deal with this separately. Basically, sales and normal sales and abnormal sales. Normal sales and sales on return or approval basis. They are different. Profit percentages are different. Treatment should be different. Understood? Say yes. Okay. Then this is the alternate approach. You can copy the moment I finish. So let us write 60 to 600. Come on. What is the stock as on date of fire? 62. What is the policy amount? 60,000. So under insurance, shall we apply average clause? Stock as on date of fire 60 to 600. Is there any salvage? How much? 12,300. If you deduct that, you get 50,300. Yeah. So 50,300 into 60,000 divided by 62,600. 48, 211. That is the claim amount. That is the claim amount. Will you do this? Will you copy this? Question number 10 is homework. Why? Answer is printed. You copied recommended approach, no? Copy the alternative approach. Don't want to copy. You don't want to copy alternative approach? Okay, fine. You don't want to copy because it will get you will get confused later, or you don't want to copy because you are lazy? Huh? Save time. ಇದನ್ನ ಕ್ಲೀನ್ ಮಾಡ್ತೀನಿ ಧೂಳು ಧೂಳು ಮಗ ಧೂಳು ಈ ಮಕ್ಕದ್ದು. Huh? This is external keyboard. This is laptop keyboard. I think laptop keyboard. I want this to be more long lasting. Right below the keyboard is your hard disk and IC. So every time you tap, impact is there on the keyboard. ಕುಟ್ಟಿ ಕುಟ್ಟಿ ಹೋದ್ರೆ ಕೀಬೋರ್ಡ್ ಚೇಂಜ್ ಮಾಡ್ಬೋದು. This is expensive. This is definitely not as long lasting as, sir. This is definitely more long lasting than this keyboard. So here if some button doesn't work, then you would have, this is more expensive to get changed. This you just throw like this and then buy cheap one. Shall we do 11th one? Come on, guys. Come on, come on. Let's now do illustration number 11. Vijay Exports. Illustration number 10, homework. 11th one and then 12th one. If you guys want, I'll give 12th one also as homework. Very similar it will be. We'll do 11th one. You guys take 12th one as homework. 11th one answer is there. Sorry, 10th one answer is there. 12th one. If you don't get, I will solve. If you get, very good. Chalo. Unfortunate Limited. Very sorry, that is 12th one. Vijay Exports. Most of the stocks were destroyed. What has happened to most of the stocks? However, goods costing 5,000 could be salvaged. Okay. Their firefighting expenses was 1,300. We add this 1,300. Remember this first question that we are having this. From the salvaged accounting records, the following information is available. Stock as per balance sheet 31st of March 2016. This will become opening stock. Memorandum trading account should be prepared from 1st of April 2016 to 27th of July 2016. Then what is given after that? From the salvaged accounting records, the following information is available relating to the period 1st of April 2016 to 27th of July 2016. Opening stock over. Purchases includes 10,000 machinery. What do we do? Eliminate. Take it 2 lakh 8. Wages 53 includes 3. Eliminate. Take it as 50. Sales 4 lakh 12,300. Includes goods sent on return or approval 40. So what do we do? Eliminate that 40. Take sales as 3 lakh 82. No, 72 300. And what happened to those goods? No approval has been received in respect of 1/4 of the goods sold on return or approval. How much is accepted? 3/4. Only 1/4 should be eliminated. Only 1/4 should be. How much is 1/4 of 40,000? 10,000. How much is it? So 10,000 will eliminate. Sales will be 4 lakh 2,300. That 10,000 will write in inner column on the credit side. On that we need to eliminate GP percentage. And then write in the outer column. Next we have cost of goods distributed as free samples 2,000. What do we do? Deduct from purchase. Right next to the 2,000. Deduct from purchases. Deduct from purchases. If this is question, Tanush, this question book is already there with you. Read from there. If you say screen is not clear, this is the maximum zoom. I can't even zoom it further. Other information. While valuing the stock on 31st of March 2016, that is opening stock, no? 1,000 has been written off. Oh, slow moving item. Slow moving item costing 4,000. So 1,000 is written off. Shall we add 1,000? So it will become 64,000. 60, and we'll in fact do it 2 columns. Normal, abnormal. Normal is 60, abnormal is 4. Cost is 4,000, no abnormal item. Because it is sold. A portion of these goods were sold in 2016 at loss of 700. Original cost 3,000. 3,000 rupees worth goods is sold at 700 loss. Selling price is 2,300. So sales inner column, sorry, sales for abnormal 700. And then loss on the credit side 2,300. Sorry, 2,300 sales, loss 700. 1,000 rupees closing stock. 1,000 rupees for abnormal. Normal same thing, no, like how we do. Difficult or easy? We read something in question number 9. We read something in question number 10. Question number 11 में 9 and 10 both are together. Normal, abnormal is there. Goods sent on return or approval adjustment is also there. Then GP percentage is 20%. 20% will eliminate from that 10,000 and also 20% from the remainder of sales, normal sales. Then policy is for 55,000. Do that, answer you'll get. No new adjustment. Anything new? No new adjustment. Shall I solve it, Fadafat? Shall I? Or will you solve it? Okay, let's say 11:15. I give you 10 minutes time. 11:25 or new time. Amele, none time. You solve it. I will also solve it. Instead of copying, you check whether you got it right. Now we're doing question number 11 Allah. Doubt. Last 3 minutes left. 7 minutes done. Sir, did you do the question or you just took break? Did you solve? Washroom ಅಲ್ಲಿ ಮಾಡಿದ್ವಿ ಮತ್ತೆ ಸೊಲ್ಯೂಷನ್ ಮಾಡೋದು 10 minutes ಟೈಮ್ ಕೊಟ್ರೆ ನೀನು ವಾಶ್ರೂಮ್ ಹೋಗಿ ಬಂದ್ರೆ ಡೂ ಇಟ್ ಅವನಿಗೆ ಮಸಾಜ್ ಮಾಡ್ತೀಯ ಪ್ರಾಬ್ಲಮ್ ಮಾಡೋದು ಸ್ಟಾಪ್ ಟಾಕಿಂಗ್ again giggling turning around talking do you know ಏನು ವೆಸ್ಟ್ ಮಾಡಿದ್ದೀನಿ ನೀನು ಆಯ್ತಾ ಮೆಮೊರಾಂಡಮ್ ಟ್ರೇಡಿಂಗ್ ಅಕೌಂಟ್ ಏನು ಮಾಡಿಲ್ಲ 10 minutes ಟೈಮ್ Can I solve? What did I say? Hey, 1 minute. Okay, 1 minute is there. Time up. Aita. Now, come on. Let me solve this. Stop writing. So, to start with, 5,000 worth of goods is salvaged. So, I'll come to my next table. Here, I'll write no stock as on date of fire. Here, I don't know how much the stock is on date of fire. From this, when I deduct salvage, I will deduct salvage of 5,000. Got that? What is after that information? The firefighting expense is 1,300. So this I will add when I find my claim. I'll write here add firefighting expenses 1,300. Got it? Then what do we have? Opening stock 63. Shall I write opening stock in my memorandum trading account? Opening stock 63,000 is total, but I think this has to be adjusted. No, 63. There is a 1,000 adjustment, so we'll keep it on wait. We'll keep it on wait. Or I would have to write in inner column. How many inner columns will you do? So we'll do working note number one. Working note number one. How much is the opening stock? It is 63,000. We would have to add 1,000 to make it 64. Then what do we have? Purchases 2,92,000 minus 10. Shall I write 2,82,000 straight? Should I do working note or do you want me to write inner column? No. Hey, we'll write it straight. Is there any other adjustment? Free sample is also there. Okay, then working note number two. Working note number two. We can't write there in inner column. It is too much. Purchases before adjustment 2,92,000. Machinery purchased 10,000. Then we'll adjust that 2,000. Not right now. What's after that? Wages 53 minus 350. Can I write 50 straight in our memorandum trading? This will be for normal only. Yeah, don't have to worry whether is it for normal or abnormal. 53 minus 3, 50,000. Entire 50,000 will be for normal goods only. Purchase also will be completely normal. Then why would you purchase abnormal goods? Goods will be sold at loss. Sales is how much? 4,12,300. Shall I eliminate this goods and return or approval? Not entire 40. In that 1/4 is not accepted. 1/4 is not accepted. So 1/4 of 40,000, 10,000. So shall I write 4,02,300 as my sales here? Yes or no? Okay. We'll do one working note on this if you want. 4,02,300. 4,02,000 sales. How much is sales given there? 4,12,300 less goods sent on return or approval not accepted. 40,000 into 1/4, 10. So I'll be left with 4,02,300 as total sales. In this, part of the goods are sold at loss. So we need to consider this into two categories: abnormal and normal. What is the next adjustment given? Free samples 2,000. Shall I deduct this free sample from purchases? Free samples 2,000. This becomes 2,80,000. Shall I post 2,80,000 to our memorandum trading? It will rate purchases as 2,80,000. Can I say entire is normal? Yeah, it's entirely normal. Why would you buy goods which are supposed to be sold at loss? What you already purchased, you will sell. Newly, you wouldn't buy. After 2,80,000, while valuing stock on 31st of March 2016, 1,000 rupees had been written off against slow moving item costing 4,000. So 1,000 is written off, so we'll add back 1,000. Make it 64,000, 63,000 plus 1,000, 64,000. Two variants: abnormal, normal. What is the cost of abnormal goods? 4,000. So I'll write cost is 4. So normal goods cost will be 60. Am I right? 60,000. Done. Okay. Let's write opening stock 64. 64. In that abnormal 4, normal 60. What is the sale part? So sales loss 700, original cost 3,000. Selling price will be 2,300. Can I say abnormal stock 2,300 sales value, and on that loss is how much? 700. Closing stock will be clear. 4,000 is there. In that 3,000 is sold, so 1,000 is remaining. That 3,000 worth में 700 rupees is lost. So selling price is 2,300. You can write it straight away here. Or if you want, you can also do working note. Or if you want, you can also do. Shall I show you the working note? Here's something, no guys. How much is the cost of it? 3,000. Loss 700. Selling price 2,300. Here normal is 4,02,300 minus 2,300, which is 4 lakh rupees. Something. Yes. What's after that? GP is 20%. Okay. We'll write GP 20%. And this 10,000 we'll have to write now separately here. Stock with customer. This is working note number 3. Now I'll write here. Stock with customer. How much abnormal mein? 10. But from that I should eliminate the profit value. No. Sale value is 10,000. Profit is 20%. 2,000 if I eliminate, 8,000 I'll write here. Correct or no? What is it? Oh, normal. Hey, normal is 8,000. Okay. Abnormal though is sold, no, completely. Nothing is remaining. Done. Then we'll write GP. GP on the other rest of the sales. 4 lakh 2300 mein 2300 is abnormal. How much is normal? 4 lakh. How do we get, sir? Magic. Hey, how did you guess, Akash? ಗೊತ್ತಾಗೋಯ್ತಾ ಮ್ಯಾಜಿಕ್ ಎಲ್ಲ 4 lakh. What is it? 4 lakh. Now 4 lakh ಮೇಲೆ 20% GP. 4 lakh 20%. Sir, abnormal ಮೇಲೆ profit ಇಲ್ಲ. Why? There is loss. Now computer tell me how much is closing stock. 3 lakh 40 plus 50, 3 lakh 90 plus 80, 4 lakh 70,000. 4 lakh 70 minus 4 lakh 8, 62,000 closing stock. Total will be 63,000. Huh? 63,000 will be now written in statement showing computation of claim. 63,000. Amount of goods lost by fire 63,000. Insurance policy is there for 55,000. Sakagala. What should we do? You would have to do average class. Correct? This is 62,000 plus 1,000. Yes. Will we accept the claim of entire 63,000? ನಮ್ಮ ಚಾರ್ಟ್ ನೋಟ್ ಪ್ರಿಂಟ್ ಮಾಡೋ ಮಿಷಿನ್ ಇಲ್ಲ. What do you do? It is a case of, it doesn't sound like no, ನಿದ್ರೆ ಮಾಡಿದಾರೆ ಇಲ್ಲೋ ಸ್ವಲ್ಪ ನಿದ್ರೆ ಮಾಡಿದ್ರೆ ಹೋಗುತ್ತೆ. The case of under insurance by applying ದೇವೇಗೌಡರ ವಾಯ್ಸ್ ಡಿಫ್ರೆಂಟ್. ಅದು ಸ್ವಲ್ಪ ಮುದ್ದೆ ತಿನ್ಕೊಂಬರ್ಬೇಕು, ಹಂಗೆ ಮಾಡೋಕ್ಕಾಗಲ್ಲ. So your stock is 63,000. Loss of stock is 2, including firefighting expenses 59,300. Now many, yes, that's what I was about to tell. Now many of them would suggest, sir, don't add firefighting expenses here. Take loss of stock to be 63 minus 5, 58. Then do cross multiplication. You will arrive at amount of claim. Then add firefighting expenses. Then you would actually receive more. That is wrong. You know why? For example, stock in the godown is 1 lakh. Stock in the godown is okay. Insurance policy is taken only for 80,000. Insurance policy is taken only for if you incur expenses to save the goods. What is the what to say guarantee that you spent money only to save the goods which are insured? So they say expense incurred also proportionately. You have 80% policy. I'll reimburse only 80% expenses. I'll reimburse only 80% loss. I will not give 100% of expenses. Am I right? When your insurance policy is for 80,000, but the goods in the godown is 1 lakh, when you incur expense, every rupee you incur, 80% is only towards the goods which is insured. 20% is towards the goods which is not insured. For the goods which is not insured, I am not accepting claim only. Why will I give firefighting expenses? Correct or not? Logical. Now understood? So firefighting expenses also will be given proportionate only. Now tell me, what is the policy amount? 55,000. Now compute and tell me what will we claim? 51,000. How many of you had got the same answer? Very good. Hey, nice. How many of you first took the cross multiplication and then added 1,300? That is wrong answer. This would happen if you take the formula. But if you use logic, you understood why we should add first. Because expenses also will be allotted proportionately. How? How? Proportionately. Understood? Come on. One more. Shall we do 12th one? Last one. Kelly sir. If they are put out the fire. See, it's very simple. You've taken insurance. I will repeat what I just told. Actually, I don't have to tell anything different. You have stock of rupees 1 lakh, you have taken insurance for 80,000. So in your godown, how much your stock is there? It's not completely insured. Only 80% of it is insured. So even if there is fire for only 10,000 worth of goods, insurance company will not give you 10,000. They'll give you 8,000 rupees per claim. 2,000 is your loss. Correct? Similarly, when you incur expenses to safeguard it from fire also, only 80% of the stock is my interest. So out of your expenses which is incurred totally, only 80% is my share. I will pay only 80% because remaining 20% you incur to safeguard the stock which is not insured. Got it, no? Anybody who still didn't understand, please ask if you have any doubt. How many of you would want to copy? No one? I'll show you for a brief moment. Whatever mistake you've done, you adjust. And if there is anyone who has not copied, closing stock is, this is 54. Only 54 ಬಂದ್ರೆ stock as a rate of fire. 54. So then 54 minus 5 is how much? 49. 49 plus 1 is how much? Huh? Okay, you're telling loss of stock is 54, including firefighting. Huh. For the purpose of under insurance, we compare, what to say, average scope clause, we compare like this. If average clause is not claimed, then you give that also. Then no problem. Insurance policy is more, no? You've taken full insurance, no? The logic is very simple. Let us say the stock as a rate of fire is 50,000. But you've taken policy for 55. You've taken more amount, value, full amount they pay. Full amount. Yaudu? Stock as a rate of fire 54,000. They give. Firefighting expenses will be given even over and above the policy amount. Are you getting? Huh? How would you do calculation of what? See, then it is very easy, ma. Stock as a rate of fire is 54,000. Policy amount is 55,000. Fully insured. Whatever is your loss of stock is claimed. Little okay. Okay, no problem. Not at all an issue. It is going little above because of firefighting expense, not because of the stock value. That is fine. Okay. Okay. Anyone who wants to copy any part of this that you had missed out or you've done wrong, please do correct your answer. Please do correct your answer. Rest of you start with illustration number 12. 12th one, no? Next one. Illustration number 12. After illustration number 12, we will take that department question. Tomorrow, freshly, we'll start with loss of profit. Loss of profit. Next part. This is loss of stock, what we did. Tomorrow, we'll freshly start loss of profit. Major part will be over. Theoretically, it will be over. We'll also do some 2 problems tomorrow on that. The remaining problems we'll do in Monday's class. By Monday, I will finish this insurance claim chapter for you. ಅಲ್ಲೂ ಬೆಂಕಿ ಆಗುತ್ತೆ ಅಲ್ಲಿ ಸ್ವಲ್ಪ ಡಿಫರೆಂಟ್ ಬೆಂಕಿ ಆದ ಮೇಲೆ to recover they take some time. After the fire is caught, for the next few months they can't do business. If they would have done business, they would have earned profit. Because of fire, stock pay they got insurance. Their business is also disturbed for some months. For that some month, they'll take some money as claim. Yes. So, like you take, if in case you fall sick, you take health insurance. No, hospital expense is recovered. But because you're in hospital, you're not going to work. Because you're not going to work, you're not earning salary. That money also will claim. ಈಗ ರೋಡಲ್ಲಿ ಹೋಗ್ಬೇಕಾದ್ರೆ ಯಾರಿಗಾದ್ರೂ ಕೂತ್ಬಿಟ್ರೆ ಅವ್ರಿಗೆ ಹಾಸ್ಪಿಟಲ್ ಖರ್ಚು ಮಾತ್ರ ಅಲ್ಲ, ಒಂದ್ ತಿಂಗಳು ಮನೇಲಿ ಇರ್ತಾರೆ, ಒಂದ್ ತಿಂಗಳು ಆಫೀಸ್ಗೆ ಹೋಗಲ್ಲ. ಸೊ ಹಂಗಂದ್ಬಿಟ್ಟು 3,000 ಎಕ್ಸ್ಟ್ರಾ ಕೊಡ್ತೀರಾ ಗೊತ್ತಾ ಕ್ಯಾಶ್. ಸ್ಟಾರ್ಟ್ ಮಾಡ್ಬೋದು ನೀವೇ. then you can start. Okay, नवंबर के साथ भी, मई के बाद भी, मई के साथ भी, नवंबर के बाद भी. Like we are with you. You pay 3,000 rupees to our company. We will give you we'll pay examination fees on your behalf. Whether you clear in 1 attempt or you clear in 4 attempts, we will pay. But our condition, you should have taken our test series. You should have attended 100% of our classes. You should have done all our homework. Nice, no? ಒಂದೇ ಸತಿ ಪಾಸ್ ಆಗ್ಬಿಡ್ತಾರೆ. ಅವ್ರ ಹತ್ರ ಎಕ್ಸ್ಟ್ರಾ ಇಸ್ಕೊಂಡ್ರೆ ಎಕ್ಸಾಮ್ ಫೀಸ್ ಎಲ್ಲ ನಮ್ಗೆ. Done. Come on. Let us now go to Next question. In the working note, do you want to copy? I hope you are done. Shall we do 12th one? Unfortunate. Yeah. What do we do with 12th one? Again, you will solve, I will solve, or we will solve, or I will solve, you will see. You sir, complicated this sir, this is nonsense. Differently they've given. You will solve. Pakka, are you sure you will solve? No. You see. Now I am in a tough situation. If I say no, I am sure you will not solve. Say, sir, you are only saying that we can't solve. You don't have confidence on us. If I say you will solve, yeah, you can solve, then I'm scared that what if you don't solve? Then what do you say? No, chapter is very difficult. Sir did 11 easy questions, 12 difficult question, he gave it to us. Last question in every chapter is difficult, that only he gives homework. No, no such intention. You tell me, you want me to solve? Okay, I will solve. Let's read. Unfortunate Limited has a go down. Money, unfortunately. A shop and a manufacturing unit. They have three places of business: go down, shop, and manufacturing unit. Okay. Factory, warehouse, so angdi. Then go down is used to store goods purchased for manufacture as well as to store finished goods. In go down, there are two things. One, raw material, two, finished goods. Raw material which is to be sent to factory is there in go down. Raw material which will go down, which will go to factory after getting manufactured, before it goes to showroom, again it will come to go down only. Did you get this? So multi-purpose go down. Multi-purpose, raw material is also there, finished goods is also there. Sir, work in progress, that will be stored in factory. Correct now. Semi-finished goods, why will you bring it to go down? You will finish it and then bring it. Next, is it complicated? Goods are transferred from go down every day in the morning to manufacturing unit and shop. So every day in the morning they'll transfer goods from go down to shop or manufacturing unit. Sir, inventory, why will they transfer to shop? Raw material to manufacturing unit, finished goods to shop. Oh. Inventory in go down is insured for 20 lakhs. That is policy amount. That of manufacturing unit is 30 and that of shop is 5. So there are two variants of units, no? Raw material separate, finished goods separate. So for finished goods, they've taken 5 lakh rupees policy. For raw material, they've taken 30 lakh rupees policy. Got it? Then, so as on 31st of December, if in case, can we use one policy amount for another policy? No, you can't use. That is different, this is different. Okay. Then, as on 31st of December 2017, inventory in go down at cost is 26 lakh. Question is complicated. It would have been nice if there is no fire. Correct. Correct. So we'll just hope that there is no fire. Okay. Then inventory in manufacturing unit at cost is 12. 31st of December. Looks like it is opening stock if in case there is fire in 2018. So inventory in shop at cost is 5 lakhs. Okay. Following transactions took place during the year mentioned. So they've given month wise: January, February, March, April, May till 20th February. Why did they give only till 20th February? Something would have happened. So what do you do if you've been allowed to go back in time? You'll go to 20th February and then you'll ensure that there is no fire that day. You'll call the fire insurance on, fire engine on 27th February, 27th April only. Huh? We have to do, April. Then what is happening then? So leave that. Sales may variety sales you done. 10% profit may sales you done. 12% profit may sales you done. Fire occurred in the shop on midnight of 27th April 2018. Shouldn't have happened to this business. And the entire stock was engulfed in fire. Engulfed means sutto ito. Very weird English word they've given, fancy. So we need to prepare memorandum trading account from 1st of January to 27th of April. The question is no different. You know what? Very simple. If they ask how much is purchased, it is 20 plus 15 plus 16 plus 8. Oh, Ashtina. Little bit of information if you give differently, you guys get so scared, no? It is same thing. Instead of giving one number, they've given different month-wise data they've given. Clients sometimes like that one. You will ask how much is sales. They'll send one 5 MB Excel sheet. You will be like scared. Don't get scared. Come to them, take the total. Over. They will give very beautifully. Sometimes more information than what you asked, which might trouble you. But you should be very choosy. But remember that you should take only what you want, not everything they give. Everything they give, you keep it there. Only what you want, you take. Okay. Then returns to suppliers 4 should be directed from supply to supply. No, returns to suppliers. Purchase will deduct. Okay. Then stock transfer to shop. So it is transferred to shop from the godown. We are doing this at godown. So this will be outflow. And there is returns also from this. 26 plus 20 plus 25 plus 10 minus 3. Sales in shop, GP 10%, GP 20%. Sorry, 12%. We will maintain sales also two variants. GP also two variants we should eliminate. Fire occurred over, entire stock was engulfed, goods costing 40,000 was salvaged intact. So this we should eliminate from computation of our loss of stock. Balance goods were recovered in damaged condition. Expenses for firefighting or salvage operation amounted to 20. This will add to our stock loss. Then goods recovered in damaged condition can be sold at 40% of cost. So whatever goods that are recovered, how much is recovered? What it is sold at 40% of cost. So 40,000 into 40%. We have to find the cost we don't know. No, cost we know. No. Costing 40,000. Okay. Entire stock was engulfed. Goods costing 40,000 was salvaged. And then you're getting here damaged condition. Oh, okay. Damaged condition goods you get 40. Whatever the difference is there, on that you get 40%. This has to be reduced from our what to say closing stock as on rate of fire to find the claim. Insurance policy at average clause, compute the claim. EG. Shall we do it? Come on. Read the question from the beginning. Little only we'll read it. Purchases 20 plus 15 plus 16 plus 8. I'll leave little space for opening stock. Okay. Then I'll write purchases. How much? One second. Okay. 20. No. Stock transfer to shop. Purchases. This is of raw materials or they've given information of what was sales in shop. Fire occurred and then the entire stock was engulfed in fire. Goods costing 40,000 could be salvaged intact and balance goods were recovered in damaged condition. Huh? Yes, sir. Shop, shop closing stock. Fire occurred in shop. Fire didn't occur in godown. Underline this. So we'll not do it for raw material. We'll do it only for finished goods. Shall we? So basically, we're not doing this at godown. We're doing this at shop. We're doing this at shop. Fire didn't happen in godown. Fire happened in shop. Okay. So purchases is right next to this purchases of raw material. What is this purchase of raw material? Or the name they've given is have they mentioned the name raw material? What have they mentioned? Godown shop. Godown is used to store goods purchased. Purchases is of goods purchased for manufacturing. Right next to this raw material. Purchases of raw material. Purchases is of raw material. For what? For godown. This is kept where? Godown. Kept at godown. This is kept at godown. No, it didn't catch fire. It didn't get burnt. No insurance claim on the same. Ignore this information. Returns to suppliers. What are we returning to suppliers? Raw material. So this has to be this only. When we are ignoring purchases, we'll ignore returns also. But this will come. Stock transfer to shop. To shop from godown. Right there. From godown. From godown. So what account are we preparing? Shop account or godown account? If you are preparing godown account, it is sales. It's on credit side. If you are preparing godown account, sorry, shop account, then it is like purchase. Inwards, no? Gravity. No, it was here. It slipped like this. But it could have been here only. But Isaac Newton, he determined gravity. So after this, it fell down. So now I picked it up. And I'm hanging it here. Yeah. I felt little energy here. So the potential energy of this item, which is at an elevated surface, got converted to kinetic energy. Oh God. Okay, listen. To shop from godown. This is like purchase, right there, like purchase. This is like purchase. Like purchase. So if it is like purchase, what do we do? Debit side, stock transfer to shop from go down. So how much is it? Total Barida 26 plus 20, 46. 46 plus 25, 51, 61. 61 plus 10, 81. Yeah, 81 lakh. 81 lakh in lakhs. There is returns. Shall I deduct 1 to 1, 1 plus 1 plus 1, 3 lakhs. Returns from shop, how much? 3 lakh. Here don't write 26 lakh plus 20 lakh plus 25 lakh. It will come till here. Correct or not? Hanuman still. No. Write only this much. Yes. What's after this? 81 minus 3, 78 lakh. After that, sales in shop at GP Pro at GP. How much is that? Two varieties are there, 10%, 12%. We'll also show separate. Okay. How much is the sales at 10%? 10 plus 12, 22. 22 plus 8, 30. 30 plus 4, 34. 34. Sell rate 34 lakh. Then at 12% it is 18 plus 12, 30. 45. 50, 50 lakh. 34 lakh and 50 lakh. Let me write here gross profit. How much is gross profit? 10% of 34 lakh and 12% of 50 lakh. How much did we get? 3 lakh 40 and 6 lakh. 6 lakh. 12%. Together 9 lakh 40. Opening stock. Gottilla. We don't know opening stock. They're telling that in the morning the goods are sent. The morning the goods are. So meaning opening stock is 0. Morning they send the goods. They sell all the goods. They sell all the goods. And it will be nothing. There will be nothing. Again next morning they send the goods. In that case then 27th or 28th there should be no stock. No. 5 lakh is there. Oh, okay. Manufacturing unit 55. This 5 lakh. No. So manufacturing unit 12 lakhs and inventory in shop at cost was 5 lakhs. So let us write that. 5 lakh. Okay. So if in case we have to assume that morning may there is 0, then night may also it will be 0, no? Because next morning fresh stock is sent. So midnight when the fire is caught, nothing gets burnt. So okay, nothing get burnt. I don't know how to answer. Nothing means like godown will get, sorry, shop will get burnt, but there is no stock inside. Got that? Yeah. So then we can find easily closing stock. How much? 78 plus 5, 83. 83 plus 9, 92 lakh 40. 92 lakh 40 minus 84. 6 lakh 40,000. Sorry, 8 lakh 40. 6 plus 2. Closing stock. Stock as an rate of fire 8 lakh 40. How much is the insurance policy for shop? Shop. Be careful. Shop. 5 lakh. See here I've circled. 5 lakh. This you ignore. This you ignore. So 5 lakh rupees. Under insurance? Definitely. What do we apply? Average clause. How much is the stock as a rate of fire? Yeah, less salvage. How much is the salvage? 40. In this question, some part of the stock is sold. Some part of the stock is salvage means this much was recovered. Balance stock is there, no 8 lakh. That is sold at 40% of its cost. That's what they're telling, no? Goods in damaged condition can be sold at 40% of the cost. So can I say realized value of that balance stock is 8 lakh into 40%? 3 lakh 20. This much money we have realized in cash. So insurance company need not give us money. If this much money we had not realized, we could not sell those damaged goods, then insurance company was supposed to pay us money. Because we have sold the remaining damaged stock at 40% of the cost, that is 3 lakh 20. We don't have to claim insurance claim on this. We will not get insurance claim on this. This is not our loss. Why? So much paisa you got, no? Stock in the godown was 8 lakh 40. Salvage is 40. And then goods which are in damaged condition sold, you got 3 lakh 20. So totally 3 lakh 60 you got. Balance is only loss. Is there firefighting expense? How much? 20. Okay. Have they given any split as to where has it been incurred? No. Fire is happening only in shop. No. So firefighting expense fully 20 right here. How much is the loss of stock? 8 lakh 40 minus 48 lakh. 5 lakh. What is the policy amount for? 5 lakh. These are full claim. No full claim. It is just matching. See, stock as on date of fire should have been 5 lakh. Loss of stock is 5 lakh. How can that entire 5 lakh be from policy? We need to apply average clause. Are you getting? Stock of 8 lakh was there in the godown. Insurance policy is taken for 5 lakh. If 5 lakh worth of stock gets destroyed, can I ask him 5 lakh? I can ask, he will not give. He will only give proportion of it. 5 lakh into 5 lakh divided by 8 lakh 40. How much? Ashte. This is it. Is the answer. Understood? Will you copy? Question में data looked little different when it came to presentation. But otherwise it is easy one. Today no quiz beta. No Tanush. Departmental accounting. Question number 14. Once we finish that, I will let you people go. Maybe I'll give it ASAP. Tomorrow, day after. Tomorrow not possible. Maybe Monday. Even if in case I finish my syllabus for the rest of the chapter for which test is not done or APTA is not shared, I'll do it and then share. Okay. Don't worry. Next APTA you want it on profit pay and post pay and dance. Let's see. We'll do it for redemption of preference shares. Oh, redemption of preference shares, they both have helped. Trilok and Adarsh, no Akash, Ayush, Akshay, sorry. Huh? Oh, name taking, if it goes wrong, it's bad. Just imagine Shrish, you standing in front of her. Like, okay. After that, even if you get the name right, it's gone. Then you need to remember one more name. That's the reason guys won't call my name. Then Maga, call him Maga, he'll be like, oh, peace. He remembers me. So many evening batch people are in morning today. I don't know how many will be there in evening batch today. Very less. 3 to 5:30 though. Oh God. Okay, 6 to 8:30 some people will come. Hmm. Sorry. Scroll madam. Whoever is done can start reading that departmental accounting question. Or you can. What did you tell? Syed hit Burde Kansala. You guys should come forward. Should sit in a. Huh? No, there is so much space. There's space in first row, space in second row, third row, fourth row, as well as in fifth and sixth row. Huh? ಏನಾಯ್ತು? This I told previously, we'll hang it from the top rather than from the bottom. Like projector is there. ಆ ಥರನೇ ಇದು ಮೇಲ್ಗಡೆಯಿಂದ ಬಂದ್ರೆ it'll be nice. No? And my suggestion was remove the board. Remove the board and put this table in the middle. Projector ಇದೆ ಅಲ್ವಾ? Projector little more extension and camera should come there. In the middle of the class. Projector? Projector screen. Projector screen will not come there. Green screen will come in the middle. Projector will be put here, there. Huh. So we'll put one projector here, one projector there, one projector screen there, one projector screen here. That is for TV, check monitor. That there was check monitor. Instead of this, there used to be one TV. Alli delva TV. That TV was here turning this side to see the comments. Chat and comment ನೋಡಕ್ಕೆ ಮುಂಚೆ. No. Student experience also will become better. People on the left will copy from the left side project. People on the right will copy from right side project. People in the middle, ನಿಮ್ಮ ಇಷ್ಟ ಈ ಕಡೆ ಬೇಕಾದ್ರೂ ನೋಡ್ಬೋದು ಆ ಕಡೆ ಬೇಕಾದ್ರೂ ನೋಡ್ಬೋದು. And moreover, the faculty will be in the middle of the class. And that camera goes little behind, no? So then we'll have a lot of room. If I stand and then walk little bit also, it will be in the screen. Done with this? Chalo. Let's do the departmental accounting question. Did you read? Page number. KL Rahul. He got out on 199. Gram Udyog. Illustration number 15. Can I have your attention, everyone? Can I? Hello, everyone. Welcome back to CA Intermediate Group 1 Accounting. We had done this topic of departmental accounting, if you remember. The most interesting part of departmental accounting is questions which will involve markup. So we previously understood why does an organization do markup? How does it help? Why not to do it? Why to do it? What is markdown? How to present the markup? What are the methods of ledger? How to flow in from trading account to markup account, trading account to stock account? Why is it called memorandum account? Where to find GP? what like what price should you show up, and mark down if it is there, what is happening on the sales price. You understood everything theoretically with small examples, and we'd also done one question. So today we are going to do another question on this illustration number 15 from our class material. This is also there in your ICA study material. If you open our ICA study material, this is the last question in departmental accounting chapter. Gram Udyog. So Gram Udyog is a retail store. It has two departments, Khadi and Silk. I'll tell you how is this different from the previous problem. In the previous problem, there was only one department, and we're doing it only for one department. Now we have two departments, Khadi department and Silk department. So we need to do memorandum stock account and memorandum markup account for Khadi department and Silk department separately. So for Khadi department, we'll prepare memorandum Khadi stock account, memorandum Khadi markup account. And for Silk, memorandum Khadi stock, memorandum Silk stock account, memorandum Silk markup account. You need to open two. 2 into 2, 4 ledger accounts. How many ledger accounts? Got this? Yeah. So the answer how I'm going to do in the class is going to be slightly different from how the answer is done in ICA study material. I will show this to you as a comparison later. And net answer is same. But presentation wise, they are not forming uniformity in the previous question and this question. I'll tell you the reason. In fact, you will understand the reason by yourself after we end the question. Okay. So it has two departments, Khadi and Silks, for each of which stock account and memorandum markup accounts are kept. Very good. All the goods supplied to each departments are debited to stock account at cost plus markup. They are teaching us how to do markup account. And with together mark up the selling price, the goods, and in connection, in account of the sale proceeds of the goods is created. The amount of markup is created to departmental markup account. We know that, no? In our stock account, we write opening stock and purchase on the debit at marked up price, and that removal of markup is done in markup account on the credit side for opening stock and purchase. Closing stock in memorandum stock account will come on the credit side at marked up price. Load or that markup will be removed in our markup account debit side. We know that. We know that. If there is mark down on opening stock, what do we do? In our memorandum stock account, opening stock is on the debit, mark down on opening stock will write on the credit. And in our markup account, markup on opening stock is on the credit, markdown will be written on the debit. Same we do for purchases. We'll do the opposite for closing stock, because closing stock is there on the credit in our memorandum stock, markdown will be on the debit, and that markup on the closing stock account will be on the debit in markup account. We do the markdown on the debit, credit side, and memorandum stock account will tally. There will be nothing left in memorandum stock account. We will not find profit or loss, and in our markup account, what we find will be our profit. Do you agree with me? Yes or no? Okay. Then they're telling us how to do. Then interesting, the questions, the answer, that is to solve the answer, the question starts from here. The rate of markup for Khadi department is 1 by 3 on cost. This is important. Underline this. It is 1 by 3 on cost. 1 by 3 on cost. And for a silk department, it is 50% on the cost. 50% is 1 by 2 on cost. They don't have to tell on cost. If they say, if they just tell 33 and 1/3 and then 50%, we know it, no? Markup is always on cost. We had discussed this. So following information is available. Khadi and silk both are given. First we'll finish one department and then we'll go to the other, or should we do both simultaneously? We'll finish one, shall we? We'll finish Khadi department first because Khadi is given first. So Khadi, how much is stock at Khadi? Opening stock. This is at cost. This is at cost. What is the profit percentage? 1/3. So in our memorandum Khadi stock account, debit side I'll write 2 balance brought down. What do I write? 2 balance brought down. How much? 10,500. Would have to add markup. How much markup should I add? 1 by 3 on cost. How much is 10,500 into 1 by 3? How much? 3,500. Can I say total will be 14,000? This 3,500 what I have debited in our memorandum Khadi stock account has to be credited in memorandum Khadi markup account. Hey, remember to use the word Khadi continuously. Why? Promoting Desi culture? No. If there is one more thing called silk, if you don't write, if you just write memorandum stock and memorandum markup, how will you understand what is related to Khadi, what is related to silk? Got it? Okay. So then write here. Okay. By balance brought down. How much will be by balance brought down? 3,500. Understood this? What's after that? Purchases. How much is purchases? 75,000. This 75,900. Let me write it in our memorandum Khadi stock account debit side. What do I write? To purchase. How much? 75,900. This is at cost. Should I add markup on this? Yes. How much? 20 75,900 into 1 by 3. How much do we get? 25,000. Can we make it 1,01,200? Okay. This 25,300, whatever we have debited in Khadi stock account, has to be credited in Khadi markup. Shall I write it there? Credit side? By memorandum Khadi stock account 25,300. Am I right? What is after this? Sales 95,600. I'll write in my stock account by Sales 95,600. Do I have to remove load on this or markup? No, no, no. Sales will be at that price only. Come to adjustment. The stock of Khadi on January 1st, 2012 opening included cost of goods at selling price of which had been marked down by 1,260. We are not scared of markdown. 1,260 we should bring it down. Am I right? Very simple. Here it is at 3,500. This 3,500 में 1,260 I should reduce. There is no space to reduce. So what do I do? Credit side. Shall I write here? Buy? Yes. Mark down. Memorandum Khadi markup. Mark down on opening stock. How much? 1,260. Am I right? Say something. So this 1,260, I'll write it in my memorandum Khadi markup account. Here, memorandum stock. How much is that? One second. Memorandum Khadi markup account. Mark down on memorandum Khadi stock account. Mark down on opening stock. How much is it? 1,260. Any doubts? Pakka? What's after that? These goods were sold during the year at reduced prices. You know why, peace? If they would have not sold, that would have reflected in closing stock. We were supposed to mark down our closing stock also. They've sold. What if they had sold part of it? If they would have told 80% of this stock is sold, 20% is still there. So markdown has to happen for 20% of 1,260. But here entire stock is sold. Underline that, right? So no markdown required in closing stock. So no markdown required in closing stock. So no markdown required in closing stock. Got it? Can we go to the next part? After this, the question says, certain stock of the value 6,900 purchased for the Khadi were later in the year transferred to silk department. So who's transferring to whom? Khadi is transferring to silk department. Stock of value 6,000 purchased for the Khadi department were later in the year transferred to silk department and sold for 10,350. Okay. Now tell me, what would we do with regard to this? We're doing accounting for which department? Khadi department. For Khadi department, it would be inter-department transfer sale. How much? No, 6,900. 6,000. It will be transferred at markup. How much markup? 1 by 3. Can I say 6,900 into 1 by 3 is 2,300? How? Did you understand how is it 2,300? Very good. Sir, but isn't it 10,350? 10,350 is the price at which the silk department has sold these goods. Khadi has bought it for 6,900. Khadi department sold it to, sorry, transferred it to silk department. Silk department has sold it for 10,350. So the 10,350 is sales to silk. Sales to silk, not purchase to silk and not sales to Khadi. Got this? Now come here. For inter-department transfer, here we have added markup of 2,300. This has to be written in the debit side in memorandum markup account. Am I right? Come to our memorandum markup account. Here I'll write memorandum stock. Markup on inter-department stock transfer 2,300. Am I right? How many of you did understand? Okay, everyone has understood? Fantastic. What's after that? As a result, though the cost of the goods is included in Khadi department, the sale proceeds have been credited to silks department. So they're telling that sales department that the sale 10,350 should be created in silk department and it is stock transfer from Khadi department. Same thing. They're repeating it second time. We understood that without even reading it. During the year 2012, to promote sales, the goods were marked down as follows. What have they done? They marked it down as follows. So we don't care about this 5,600 and 10,000. What we care is how much is marked down. 360 and 2000. So which part is been marked down now? Purchases. What is marked down? Obviously, why opening stock is already marked down and then sold. No, current year purchases may also they're marking down something. Right now we're doing only Khadi. Am I right? So look at Khadi. 5,000 was there. It is marked down by how much? 360. And let's reduce it from purchase first. Shall we? Okay. So purchases are here on the debit. If I have to do markdown, where do I write? Credit side. I'll write here. Mark down on purchases. How much? 360. Mark down on purchases. And this 360 I have written in our memorandum stock account here on the credit side. Where else do I have to write this? Very good. Come on. Let me write here on the debit side. Memorandum stock account. Here. Memorandum Khadi stock account. How much is marked down on purchases? 360. Any doubt? Please respond. Any doubt? It should be memorandum Khadi stock account. Alva. Am I right? Yes. What's after that? Question me, what does it say? All the goods marked down were sold. All the goods marked down were so nice. If they were not sold, then it would be part of closing stock. On the closing stock also we were supposed to do markdown, but they've told like all the stock which is marked down is sold. They gave discount, so it got sold. Except silk of value 5,000. We'll see it when we do silk. Right now we're reading only Khadi. We're reading the question two times. First we'll finish Khadi, then we'll do silk. That's it. We don't have to worry about this part. Only silk mein there is closing stock 1,000. On that 1,000 we need to do proportionate marking down. Sir, how? For 10,600 marked down is 2,000. For 1,000 rupees, how much will it be? So 5,000 marked down by, oh, they've only given 1,000. Sorry. I thought so. I thought wrong, sir. So they've only given that 1,000 rupees will be marked down from closing stock. But that, however, we'll do it when we start silk. Not right now. Marked down is 1,000. Okay. Goods is 5,000. So cool. No problem. Then what do we have? Yeah, otherwise also simple. 10,000 may 2,000, other 5,000 may 1,000. Yeah. At the time of stock taking on December 31st, 2012, it was discovered that Khadi cloth costing rupees 390 was missing. Underline that missing. Abnormal loss. What is it? Abnormal loss. Am I right? Okay. Such abnormal loss of 390 was missing and it has to be written off. Shall we do that abnormal loss? Stock is going out. Am I right? So where do I write in my memorandum Khadi account? Credit side. What do I write? By abnormal loss. How much? 390. But we'll add markup to this. How much? 390 into 1 by 3. How much? 130. By 20? 520. Am I right? This 130, what is there here as abnormal loss? Pay markup. This has to come in our memorandum markup account. Here I'll write here. Debit side. To memorandum stock, markup on abnormal loss 130. Am I right? That's it. Anything else missing? No. Everything done. So now we'll close our memorandum stock account, but there is one thing missing in our memorandum stock account. What is it? Closing stock. Closing stock. Rest everything is there. Shall we write that? Yes or no? That will be found as balancing figure. 14 plus 1 lakh 1,200. 1 lakh 15,200. 1 lakh 15,200. Identify balancing figure. 95 plus 9 plus 520 plus 1,250 plus 360. 8,260. This is at marked up price. This is including markup. Markup is 1 by 3. Am I right? So this is 100 plus 33.33. This is 133.33. 8,260. So on this I need to remove markup. No, here. Debit side. Correct or not? Yes or no, guys? How much is that on closing stock? Balance carried on. Markup on closing stock. It is 8,260 into 33.33 divided by 133.33. Or other way around. It is 1 by 3. No. You do 1 by 4. Or do 33.33 divided by 133.33. You will still get the same thing. 0. Choose 0. 65. 2065. Done. Everything is done. So this ledger is tallied. Here you will find the profit. The 25,300 plus 3,500 is 28,800 28,800, 28,800. 28,800, deduct this. 2,300 plus 130. 2,430. 430 plus 1,260 plus 360 plus 2,065. Deducted, what we get is profit. 22,685. Yes, we're done with profit. We're done with profit. This is for Khadi department. Exactly same thing needs to be done for silk also. Are you getting it? Yeah. So if you're watching it online, what I would recommend is pause the video at this stage. Try to do silk. People are watching it recorded. Okay, pause it. Try to do silk on your own, and then check whether your answer is copying, matching with mine. For the people in class, no such facility. I will solve it. You later copy it. Sir, why? Firstly, it's 12:22. Got it? Nextly, you know what will happen? I'll give 10 minutes. The moment I say try it on your own, 4 people will go take washroom break. As if it's a movie and I've told, okay, interval. Huh? Let us finish that. Now, before I go there, I will tell you what is the difference between this and ICI answer. Shall I tell you what is the difference? ICI answer, what they have done is they have not found profit here. They have not found profit here. Sir, then where did they find profit? They found part of the profit in markup account, part of the profit in stock account. Sir, how do you find profit in stock account? Very simple. Whatever that markdown we have written now here, they have not written that markdown here. They have written markdown here. Sir, but if they write here, you should write stock account. No, here they have written P&L account straight for markdown. So in P&L draft, if they prepare, no, they will have something on the debit side, something on the credit side. Net difference will be same. Net difference will be same. Shall I tell you what have they done? Mark down, they have not written here. So there will be difference in this ledger. That difference will be transferred to P&L. And they have difference in markup account also. That actually on personal front, I can tell you very openly that is wrong. That is not the correct method. But net answer will be still same. You can compare it at the end. In fact, I'll also show it for you to compare. But for now, let us start with our memorandum silk account. Shall we? And that is the reason why people find this topic difficult. Why? There are only 2 questions in ICA material. In that one question, they've written one way, one more question, they've written one more way. So by the time you understand with one question, you want to check with the same concept is applied in next one. No, next one they've done differently. So people will get confused there only. They think, no, markup, leave it. There is not, you don't have to fight every battle in life. Yeah, come on. Let us read. 18,600 in silk department opening. Opening stock. How much, Ray? 18,600. Okay, Nana. Come on, tell me, Nana. Next. Okay, right. Let's go to next. 18,600. How much is markup on this? 50%. Okay, bolo. 50% of cost. So it is 50% of the cost. So I'll take 18,600 into 50%. How much do we get? 9,300. If we add, we get 27,900. And this 9,300, where else do I write? In our memorandum silk markup account, I'll write by balance brought down 9,300. Some of them like, sir, so many times you told silk, now I feel like eating silk chocolate after class. So then purchases 93,400. So shall we write 93,400 in our memorandum silk account as purchase? Okay, 93,400. We need to add markup on this. How much? 50%. 50%. Yeah, how much is that 50%? 46,700. If we add 99, 139, 140, 100. And this 46,700 shall we write here credit side? Memorandum silk stock account markup on purchases 46,700. What do we have after that? Sales 1,25,000. In our memorandum stock account, I'll write by Sales 1,25,000. What's after that? That's it. Marked down on Khadi, not on silk. Read this. This entirety may anywhere silk is there. First adjustment. First adjustment. First adjustment not there. Come to second adjustment. Certain stock of value 6,900 purchased for Khadi department were later transferred to silk. For silk it will be purchases. Debit side, inter-department transfer. How much? 6,900 is transferred. At what price? No, you'll write it 6,900 and then add markup. They would record it as sales and they would remove that also there only. Are you getting it? For this department, their markup is altogether different. How much is markup? 50%. How much is 50%? 6,900. Hey, that department markups is in that department book, so this department markup is in this department book, so because that department added so much markup on sales, we don't take that marked up price mein markup we don't put. There they take cost plus 20% they would have done. You take that 20% plus price and then on that you put 25%. No. If you do that, you had asked one doubt in department. You remember department A sends goods to department B goods to department C. Department C stock by do we remove unrealized profit only of department A or only of department B or only of or also of department A? Such double thing I told you don't have to do that. That gets adjusted in department B. Here, if you don't take 6,900, you would have to do that double removal of unrealized profit at a later stage, which is not there. Markup is on cost. Markup is on cost. They will disclose the cost, but they'll individually add their markups. So 50% is how much? 3,000. Together it becomes 10,350. This 3,450 is markup, which we have written here, which will go to memorandum markup account on the credit. I'll write here markup on inter-department stock transfer 3,450. What do we have after that? It is sold for 10,350. Don't worry, it is already included in this sales. We don't have to write it separately. Then that's it. We have silk departments marked down. How much is marked down? 2,000. From what? This is on purchases. So on purchases, when you do markdown, purchases is here, no? 46,700 I should deduct. Shall I write here markdown on purchases? How much? 2,000. So in our memorandum markup account, I will write here. So markdown on purchases how much? 2,000. But if this purchases is completely sold, then there is no markdown to be done on closing stock. But it very clearly says all the goods marked down were sold except silks of value 5,000 marked down by 1,000. Right next to this 1,000 included in closing stock. 5,000 is included in closing stock. Underline that 5,000, right? Included in closing stock. So we should do markdown for how much? 1,000. Markdown of 1,000 on closing stock. Come back here. Closing stock in our memorandum silk stock account will appear on the credit. We don't know how much. That is what we'll find as balancing figure. That is what we'll find as balance figure. That will come. On that markdown will happen on the debit side. How much is the markdown here on closing stock? 1,000. This I would do in my memorandum markup account also. Because closing stock is on the credit in stock account. On that markup will come in debit side in markup account. So on the credit side I'll write memorandum markup mein mark down on closing stock 1,000 rupees. Done. Question is over. Abnormal loss of 390 is there only for khadi. There is no silk loss. Silk is safely safeguarded. Any balance in memorandum silk stock account is our cost. And this cost is this is including markup. This is including markup. It is 1/2 on cost. On marked up price, it will be 1/3. If you do 1/3, I'll get my markup. That I'll write in my memorandum markup account debit side. Balance in figure is profit. Easy? Come on, let us see this. Tell me how much is the balance carried on here. 52,350. Yeah? 52,350 is closing stock including markup. So in my memorandum silk markup account, I'll write here, what do you say? Balance carried on. So 52,350 is including markup. Cost 100. Markup 50. Marked up price 150. So 150 is 52,350. How do you find how much is markup? 50 by 150 or 1/2 on cost, guys. This is 1/3 is on sale types. So I need to do 56 52 350 into 1/3. Did you understand why 1/3? How much? 17,450. Find the balance in figure. That is our profit. 9,300 plus 46. 55, 58, 59. How much? 6,450. Deduct these two. 41. This should be transferred to P&L. This is just a P&L extract. I'll write khadi markup 22,685. Silk markup 41,000. That's it. This is the answer. Are you getting this? I will give me one moment. I'll just show the ICI answer for this one and I'll tell you how different is that. Individually it will look different, but on the whole it is same. And you can write this answer and still get full marks. One attempt when it was questioned, I had thought the exact same way student had written and they had got full marks. Okay. So don't worry about marks. Marks will be fully awarded. But if you try and see from that perspective, you'll get full confused. Okay. So my recommendation for departmental accounting, please don't watch any video on YouTube. Don't. You watch, you get confused. I bet. Open challenge. Watch one. Dare. It is a dare. Open dare ಕೊಡ್ತಾ ಇದ್ದೀನಿ ನೋಡಿ. ನೋಡಿ ಮಜಾ ಬರುತ್ತೆ. ಫುಲ್ ಕನ್ಫ್ಯೂಸ್ ಆಗ್ಬಿಡ್ತೀರಾ. It is my request, okay? I will not stop you. At the end of the day, it's your choice. ನೇಮ್ ಇದೆ ಅಲ್ವಾ? Question number 7 from ICI material. Same question, no? I'll show the end answer to you first, or we'll see the difference. So here, what have they done? See here, in memorandum stock, they won't call it memorandum at first. They call it silk stock. First mistake. Second thing, they found P&L balance, 1,000 rupees. In which? Stock account. Tappu. You should not be doing it. You should be doing the profit only in markup account. And so they find 1,000 rupees difference there. They find 42,000 rupees difference here. No working note, nothing. They just write 46,700, 43,450. They won't tell mark down on what, mark up on what. They won't write. So that's the reason I told you follow class notes. And first they've done silk, then they've done khadi. We've done khadi first, silk first. That order does not matter. And again in khadi stock account, they have P&L 1,620. Markdowns they have not written here. Markdown has to be written in khadi. In the description that was given in the question, there only they tell no, it should write markdown. Correct or not? So you're also not done. So P&L extract is done. 1,620 debit, 24,305 credit. See the net difference? 24,305 minus 1,620. Do it. Or simple, 42,000 minus 1,000. 41. That one? When you do 685? When you do 685. They've got answer same, but presentation is different because markdown is not done like this. Next, we did the previous one, Maltese. See that Maltese question. They've done markdown like this only. So there are two questions. One question may they've done one way, one more question may they've done one more way. So when you try to read from the material, that's the reason you get confused. You feel like it is two different concepts. It is one concept. It is one concept. And people will feel like khadi and stock account is a very different one. Why? There is two stocks. Two stocks means it is two problems given together. One problem they've given abnormal loss. One problem they've given markdown on closing stock. One problem there is markdown on opening stock. That's it. Idraliro adjustment. Adraliro adjustment. Idralilla. That's it. I hope you guys understood this part. Did you? As sweet and simple as this. Would you want to copy it right now? Hey. You don't want to copy it right now. When will you copy? It's updated. Yeah. So I'll wind up, but I'll still be showing it on the screen. Whoever would want to copy can stay back, sit, copy, and then leave for the day. Okay? Did you guys learn anything new today? And now is departmental accounting difficult? Will you be able to do markup question? Please do go home and then solve this markup question once again, and trust me, you will be able to do markup question. And when you are able to solve markup question from department, you are not among that bigger crowd of people. You are among that elite class of CA inter students who can solve the difficult part of the syllabus also. And it's not difficult to you. Is it difficult to you? That's it, guys. You understood it. That's the objective. And that extra time that you took is served, if I'm not wrong. Okay. Remember, life is not a battle to be struggling. It's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game? Are we in the game? Come on the top of your voice. Are we in the game? That's it, guys. Tata, bye-bye. Take care. See you all in tomorrow's class. Till then, have a great time. Bye. Tomorrow, same time, 7.